Hi, everyone. Welcome back to the Kuderna podcast. I'm Brian Kuderna. It's election season. I'm sure we've all seen a million ads. We're getting sick and tired of hearing about it. But as I record this episode, it is October 28th, 2024, and we have just 8 days until we know who our next president is going to be. So I wanted to take this week's episode and really give you the full review of my analysis on both candidates' economic agenda. So I'll be breaking it down, of course, from an economic standpoint, but also one of personal finance and what this might mean to you and your money and your own financial plan as a financial advisor. Okay, so we'll kind of see this from two angles, the bit of the micro and the macro. Now, the reason that I really wanted to make this episode is I've been providing a lot of commentary on both parties and their stance on things. You may have seen it in some articles that I've wrote and have been published. I'm doing a lot of interviews with various media outlets. But one thing that you'll note is while you're getting to see and hear me, Brian Kuderna, you're getting usually sound bites, clips and quotes, and it's an edited form is what we'll call it. At best, you're getting a summary of my analysis, but you'll often find that these clips and sound bites and such are part of a larger story that outlet is putting out that's in line with whatever their stance, their viewpoint, or narrative might be. So it's all well and good, that's a part of the game. But really, so that there's no misinterpretation, I felt it was only fair that I give you a full breakdown, about a half-hour monologue here of where we are economically and what Kamala Harris in her campaign is addressing and what Donald Trump in his campaign is addressing. So I'll try and give you as unbiased, politically free breakdown, and then also a little bit of my op-ed on the good, the bad, the ugly, should the next 4 years be under Kamala Harris or the next 4 years under Donald Trump. But before we get into that, I just want to lay down the landscape. Where are we today? Because I know it's so easy to get these things kind of lost in the shuffle, especially when everything under the sun seems to get politicized. So let me give you some raw data of where we came from, and we'll introduce that as when President Joe Biden came into office, where we've gone the past 4 years, and then where we are right now at election time of 2024. All right, so let's look at a few key economic indicators. Let's start with unemployment. All right, so when Donald Trump was closing out his first term in office, of course, it was right smack in the middle of the COVID-19 pandemic. So just to be fair, I'm going to give some pre-COVID numbers, and then we'll give those in which President Joe Biden entered the White House in January of 2021, and then I'll share the current or the latest data that we have. So for unemployment right before COVID, so February of 2020, the unemployment rate was 3.5%. Okay, obviously when the pandemic hit, unemployment went through the roof as we had stay-at-home orders and lockdowns and everything else. And then we got that under control. And by the time President Joe Biden entered the White House, the unemployment rate was 6.3%. The latest data, October 2024, the unemployment rate is back down to 3.8%. This is a really interesting benchmark because as we've gone through these ups and downs of inflation, which I'll get into in a moment, the Fed hiking interest rates, fears of a recession coming about, a slowdown temporarily in GDP, all these different things, a real sticking point was unemployment. Unemployment remained stubbornly low throughout the Fed's attack on inflation. And technically speaking, it's the only reason why what we went through a couple of years ago was not defined as a recession, because unemployment never really got much higher than where it is right now. All right, so that's something that fell quickly once we got the pandemic under control, and it has remained at a pretty low level throughout and is currently at 3.8%. That's unemployment. Next up, let's talk about inflation. We'll get right into it. So the inflation rate as measured by the CPI or the Consumer Price Index, right before COVID, February 2020, the CPI was 2.3%. Okay, pretty low, very, very near to the Fed's long-term target rate of 2%. When President Joe Biden took office in January of 2021, the inflation rate was 1.4%. Okay, that's when he entered office. Where are we right now? October 2024, latest data, 2.4%. Okay, so this is one of the ones that's interesting, though, is obviously I just tallied off some very nice numbers, all right in line with what the target rate is in 2020, 2021, and 2024. Obviously, what happened in between is a whole nother story. All right, following all the massive rounds of stimulus that we had in our country, we saw inflation go soaring upwards of 9%, the highest that we've seen in over 40 years, before the Fed pretty much went on the full attack, hiking interest rates extremely quickly a couple of years ago. And now, fortunately, we've brought in the inflation rate down considerably to 2.4%. Okay, so that's where we are right now. Let's talk about GDP, another great measure of the economy, gross domestic product. That's all the goods and services produced by a country. All right, so this is done by calendar year. So 2019, all right, the year just prior to the COVID pandemic, our GDP was 2.2%. When President Joe Biden took office, so looking at the 2020 calendar year inflation rate, negative 3.5%. Okay, obviously GDP took a massive hit when we had the lockdown. And then where are we now? October 2024. So if we look at the latest reading, which would have been the second quarter of this year, 3% GDP growth. So not bad. A couple other numbers that I want to share with you guys, and then we're going to get into these economic agendas. But again, this landscape, we got to know where we're at. So if you have to click that little rewind button to go back 15 seconds, do that a few times. Just familiarize yourself with these numbers. National debt. This is one that when I put on my economic hat, or if I put on my CFP hat, I'm constantly talking to folks about, because it is amazing at the amount of seminars I do. When I poll the audience, what's the national debt of the USA? The numbers I get are all over the map, and most people are not even remotely close, okay? So the national debt for the US federal government right before COVID, $23 trillion, right? $23 trillion, a massive, massive number. That was right before COVID. January 2021, when Biden takes office, $27.8 trillion. All right, that was following, of course, quite a bit of the stimulus that was getting introduced. And then we had more stimulus to come under Biden. October 2024, excuse me, the latest reading on the national debt, $35.7 trillion. All right, you can see that rate of increase. These are trillions that I'm saying. People can't even wrap their head around the gargantuan size of that amount of debt and how quickly it's rising. And I'm going to come back to that number because it's one that's almost being brushed under the carpet. And it is one that I think we're hitting an inflection point where that is critical, that we start to pay mind to that number. And then if we want to talk about you and your money, a great measure of it is going to be the stock market, okay? Stock market obviously impacts just about everything. All of us may have some connection, whether it's through our 401k, our pension, our Robinhood account, our brokerage account, whatever it could be. We're all involved in the stock market, or it's affecting us, if not directly, in an indirect manner. So we'll look at the S&P 500 as a broad measure of the stock market. So immediately before COVID, we look at February 1st, 2020, the S&P 500 was at 3,250. All right. Then shortly thereafter, in March of 2020, in just 3 weeks, the stock market dropped 34%. That was the fastest crash since 1929. Okay, so that's when things got very scary during the COVID pandemic. If you can remember that, 4 years ago, it might seem like a distant memory. Then we had a very quick rebound. Not only did we recover all 34%, but in 2020, if you could believe it, the stock market finished positive 16%. Very odd year in the stock market. So January 2021, when Biden takes the Oval Office, January 20th, 2021, the S&P is at 3,768. Okay. And then since then, we've gotten all the way to today. Obviously, a bit of volatility along the way, but pretty good markets all in all. October 2024, if we look at earlier this week, my reading was on October 22nd. the S&P 500 was at 5,861. Okay, depending on when you're listening to this episode, we are either at an all-time high or very close to it. So that's the stock market. All right, those are just some indicators to give you an idea. Unemployment, inflation, GDP, national debt, and S&P 500 of where we were and where we are today. Now, let's get into what does the future hold.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Kuderna Podcast.
All right, maybe we'll go ladies first. We will give the analysis of Kamala Harris's economic agenda, and then we will switch over to Donald Trump. And then I'll give you a little bit of my take, and pros and cons. Again, trying not to be at all biased here. So what are some of the staples of the Harris campaign's economic agenda? Number one, she has a very detailed agenda. If you look at her campaign website from an economic standpoint, one thing, a very quick and easy observation, there's a lot more numbers, okay, a lot more specifics versus Trump's side. And we're going to get into that too. But let's start with some of the key underpinnings here, and especially for individuals and investors out there. First up, she has spoken about increasing the corporate tax rate from 21% to 28%. Okay, if you remember, prior to Donald Trump's first term in office, all right, he had the Tax Cuts and Jobs Act in 2017. Before that, the corporate tax in America actually went up to a rate of 35%, which was one of the highest in the world. As soon as Trump got into office, that was one of the things he went on the offensive with, and he slashed that corporate tax rate from 35% to 21%. Okay, many of the provisions in the Tax Cuts and Jobs Act, or the TCJA, those are set to sunset or expire in 2025. And this, if Harris wins the ticket, or if she wins the election, she'll go into the White House, and there will be opportunity for her to push some reforms from a tax standpoint. Whereas during President Biden's term, much of the Tax Cuts and Jobs Act was untouched. All right, so she wants to bring that corporate tax rate from 21% up to 28%. Another big thing she wants to do is increase the capital gains rate from 20% to 28% for high earners. Okay, so you're seeing obviously some tax introduced here. Another thing that she wants to do, aside from taxing corporations and the wealthy with billionaire taxes and things like that she's floated out there, underpinning of her agenda is she wants to help young professionals. Okay, you saw a lot of that for 4 years under President Biden with all the attempts at the student debt relief. That was something that they were constantly pushing. She's kind of piggybacking on that from a bit of a different angle, and that is of the first-time home buyer. Okay, so one of her promises, just like Biden before her, is she's promising not to raise taxes one penny on people who make less than $400,000 a year. All right, so we'll see how that goes. Time will tell. But back to the young professional, these are some of the things Kamala Harris really wants to go for. She wants to increase the child tax credit from $2,000 to $3,600, okay, to try and help young families. She wants to expand the earned income tax credit to $1,500 for low-income folks who are not raising a child in their home. She wants to try and expand Medicaid and the Affordable Care Act a little bit further. Okay, so she's kind of floated ideas out there revolving around that. Some other things, she wants to extend the $35 cap on insulin and the $2,000 cap on out-of-pocket expenses that seniors now have available to them. She wants to expand that to everyone. And then going back to the first-time home buyer, she wants to expand low-income housing tax credits, or the LIHTC. That's a program that's incentivizing developers to build more affordable housing. Right, that's something she's going for. And if you look at her website, she has in there a lot of analysis from other PhDs in economics and such that call it the most aggressive supply side approach in housing history. Okay. what she's trying to do or proposing to do is really give a lot of help and incentives to builders and developers to build more. Okay, that's plain and simple what they're trying to do. And then on the opposite side, on the demand side, she's offering up to $25,000 in down payment assistance to first-time homebuyers. Now, just not to get ahead of ourselves, but a critique sometimes is if you have supply and demand in economics, if we boost supply, but then we boost demand in sync with that, it can net out what would be the effect. Okay, so in theory, I mean, if we gave $25,000 to a developer for a new unit, and then we gave $25,000 to a buyer for that same unit, they very well may increase the price and the resulting purchase price. They could end up having the same effect to that buyer. So that's been one of the criticisms of it when you try and go after both sides simultaneously. So she has made a big push again to try and help first-time homebuyers. The methods to do so, we'll have to see if those come to fruition or not should she get into the White House. Another big thing, she wants to expand the business startup expense deduction for new startup businesses from $5,000 to $50,000. A pretty bold step there. And then finally, she has promised up and down that there will be no cuts whatsoever to Social Security or to Medicare. And I'm going to come back to that one in my op-ed piece as well. So that's a little bit about the Kamala Harris and Tim Walz with their economic agenda. Like I said, they're trying to kind of following the classic Democrat playbook. They want to increase taxes where possible on the rich, be through corporations or through high-income individuals. And they also want to try and do more for young professionals, whether it be young families or first-time home buyers. Those are the underpinnings of her agenda without question. There's more details in there that would be beyond the scope of this episode, but those are some quick, easy takeaways. Now, if we switch gears, if we pivot and we go over to Donald Trump's economic agenda, you'll notice as I start to go through some of these things, some very different. Okay, so there's not a lot of room for confusion here. I think if you vote Harris or you vote Trump, from an economic standpoint, it's quite clear what you're getting. On Trump's side, what does he want to do? He more or less wants to repeat his first term in office and maybe dial it up a notch. So what do I mean by that? He has said that he wants to make most of the tax provisions of his 2017 Tax Cuts and Jobs Act permanent, where Harris wants to obviously increase the corporate tax rate from 21 to 28. Trump has talked about not only keeping it at 21%, but trying to reduce it further to 15% to make it easier for American businesses. He's talked about keeping most of the tax rates the same as that act allowed, but he wants to remove the cap on what's called the SALT cap. This is the state and local income tax, or excuse me, state and local tax deduction that folks could take on their tax return. Currently has a cap of a $10,000 deduction. He wants to remove the cap, okay? Or at least he's talked about doing that. Some other things he wants to do, he made this very popular. He wants to eliminate taxes on tips for restaurant and hospitality workers. Kamala Harris, by the way, she followed that up and said she would also do that. So if for nothing else, maybe that is one part where there is room for bipartisan agreement because they have both said they want to get rid of the taxes on tips. Trump then kind of doubled down and said he also wants to remove taxes on overtime. So that's another thing that can be looked into. He's been very outspoken against the Green Deal, the Green New Deal. He wants to repeal most of those provisions. He has been beating the drum to drill, baby, drill, as he likes to say. He wants America to be the top producer of oil and natural gas in the world. Now, here's something I think everyone needs to kind of understand. Where President Biden wanted to be known as the greenest president in history and really on the forefront of going green and cleaning things up, it's worth noting that America was the #1 producer of oil and natural gas in the world every year of the past 4 years. Okay, so while we may have done some steps to try and get green, we're still an enormous producer and consumer of oil. And that was all under Biden's presidency. So essentially, Trump is saying we'll continue that, and he's bragging about it, whereas the Harris camp is kind of shying away from that fact. Some other things that are unique, he's opposed the creation of a central bank digital currency and defending the rights to mine Bitcoin. He's spoken a lot about using Bitcoin further to help with our national debt. So he's kind of embracing some of the crypto world, where you're seeing much more regulation or talk of it from the Harris camp. Some other things that are kind of unique to, economics. He wants to open limited portions of federal lands for new home construction. He wants to create alternatives to four-year college degrees, and then have that bring competition to lower education costs. But so these are some of the domestic things. Where Trump is vastly different is where Kamala Harris said, okay, our underpinning, if you will, is for the young professional and for the family getting started in America, mostly domestic issues. Donald Trump, his kind of underpinning of his agenda has been to go on the offensive internationally. His agenda, if you look at any point of it, you can't go 2 sentences without hearing about China. Okay. President Trump introduced a massive amount of tariffs in his first term in the Oval Office. And he's talked about keeping those tariffs and cranking them up significantly. All right. Now, here goes another thing that everyone should be aware of. Whereas the Harris camp has really attacked Trump for this, that it's going to cost the American consumer an arm and a leg, that any of these tariffs that are introduced would eventually just be passed down. Those costs would be passed down to the end consumer and whatever the price is when we want to go purchase these products. When Donald Trump introduced many of these tariffs, particularly on China in 2018, some of these were severe, and it was attacking, aluminum, steel, things of that nature that was coming over from China. Every single one of those tariffs remained in effect throughout Biden's presidency. President Biden actually increased tariffs on China as early, or as late, I should say, as last September, just a month ago. He increased tariffs on Chinese electric vehicles that could be imported to the U.S., and also the importation of Chinese-made electrical vehicle batteries. So it's kind of unique that you're hearing a lot of the attack on Trump for the tariffs and the trade war, but everything that he did from a tariff standpoint in his presidency has remained untouched. Some of them have actually increased over the past 4 years. But with that said, these are some of the other ideas. He has kind of piggybacked on that he wants to create what's called the Trump Reciprocal Trade Act. What this would say is that any other country that places a tariff on an American export, we would immediately hit that country with a reciprocal tariff on any imports from that country. So if Mexico were to tax an American export at 100%, we would then tax Mexico for any imports we get from them at an equal rate of 100%. As he says, an eye for an eye, try and level the playing field from that standpoint. He wants to create baseline tariffs on foreign-made goods. He wants to revoke China's most favored nation status and stop China from buying American real estate. He wants to stop the importation of Chinese vehicles. So you're hearing a lot of things along these lines, imposing a universal tariff on all U.S. imports of 20%, raising existing tariffs on China. So there's a lot of talk in there about tariffs, okay, and most of it pertaining to China, okay. Recently, he even said that if he were in office, China was looking to build manufacturing plants, auto manufacturing plants in Mexico. And he said that absolutely none of that could come into America if they were to build a plant right there in Mexico. And there were reports that China then abandoned that idea of constructing that plant right in Mexico. So this is before he even gets in office, or if he gets there, he's already at least vocally having an impact on some of their initiatives. So that's something that's very unique, because if you look at what's happening just recently, a couple months ago, Jamie Dimon came out and said the greatest threat to the stock market right now is geopolitical unrest. And the Harris camp has been very, very quiet on things internationally from an economic standpoint, at least in proposing tariffs. They've kind of said we're not going there. Whereas Trump, that has made, one of his calling cards that he wants to get on the offensive and to do so quickly. Okay, so you can be the judge of that, but that is a very clear and distinct difference between both camps. So those are a number of, kind of points that you want to note. I know I went through a lot. You can read some articles, and where I do have this in a written form, it's a lot easier, obviously, to digest. But hopefully this just gives you an idea of what does a Kamala Harris presidency look like, and what does a Donald Trump presidency look like. Now, I told you, if you go on Harris's campaign website, you will see a number of those initiatives that we outlined, very, very detailed, with percentages, with dollar amounts, with numbers in there. Where on the Trump side, it's a little more conceptual. His argument has been that once you get into the White House, you're never going to have anything that looks that detailed because it's got to go through Congress. It's got to pass both houses. And if it even goes through, it will look quite a bit different from what the initial idea was. So you could say, is that a legit point or not? Whether you want to be kind of in the minutia or remain kind of 10,000 foot high level, those are two differences as well. But I think something that's kind of unique too is Trump does have a record of, kind of when he brought about tax cuts, lowering regulation, and cranking up tariffs abroad. What did that do? We got to see all of that. We had 4 years of Trump. And if you look at it from a stock market standpoint, let's look at the S&P in 2017. When Trump came into office, the S&P 500 was up 26%. 2018, he introduced all of these harsh tariffs on China. There was a lot of fear about that, about a trade war beginning. What would that do to all of the production and consumption here in the States? Would it get so much more expensive? So in 2018, following all those tariffs, the S&P 500 finished down 6%. So a down year, but not crazy. We're not talking a depression, but it was an off year. In 2019, the S&P 500 rallied 28%, obviously one of our better years in history. And then in 2020, amid the pandemic, the S&P finished up 16%. So from an investor standpoint, you can see kind of that balancing act of trying to boost American business through lower taxes, lower regulation, while simultaneously going on the offensive internationally, and kind of that tug of war and what that meant to investors. So that's something to note. From the Harris camp, you're not hearing so much internationally. That's kind of a missing point that has really been brought to the forefront, how all of that would be handled. Or would it be kind of a quiet continuation, as we saw during the Biden presidency, where these things remained? It's just not that they were really publicly promoted. So that's one thing to note as well. Now, if we could switch, hopefully I've given you guys some things to chew on from both camps. I'd like to give you a little bit of my causes for concern, we'll call it, but also opportunity. So like I mentioned at the outset, our national debt, this is something that I think every economist would agree is on the brink of spiraling out of control, or it seems that way. And I don't mean that in a purely negative standpoint. If our economy continues to grow, and stay ahead of the rest of the world, everything is relative, and then we can handle that debt and move on as we will. But things have changed. And how do I know that? Well, you just look at the rate of which that debt has increased. And then if you look at the largest line items on the U.S. federal budget, all right, for a long time, number one was Social Security. That's not the case anymore. Now, number one is Medicare, Medicaid. Currently, as I record this episode in 2024, Medicare, Medicaid costs about $1.8 trillion annually. Number two is Social Security. Social Security is the largest source of retiree income in our country. And the cost of Social Security is $1.5 trillion. All right, so still a massive entitlement program, but it's now second to healthcare via Medicare, Medicaid. Now, where am I concerned about debt? Why is that a problem? This is something that's very new. Number three, the biggest expense to our country is the cost of interest on existing debt. All right. Interest right now is about $1 trillion a year just to service the interest on our existing debt. $1 trillion a year. That's the third biggest line item on the U.S. budget. Why is that something to really be concerned about other than the obvious? Well, that's three. What's number four? The Department of Defense. We're spending more just to service interest right now than we are on the U.S. military. Okay. In 2020, not that long ago, the cost of interest was $359 billion. It was literally half the cost of our defense budget. Okay. So we used to spend just 4 years ago twice as much on the U.S. military than we did on interest on debt. Now we're spending more to service interest on debt than we are on our Defense Department. That, I think, is a little bit worrisome. That's something that we should pay more attention to. And how can we corral that massive amount of debt? Well, this is something that I hope both camps begin to, speak about and address. However, they're not. The two biggest line items, Medicare, Medicaid, and Social Security. Both candidates, Harris and Trump, have said unequivocally they will not cut benefits for either program whatsoever. So these are the biggest expenses that our U.S. government has. And we have two candidates vying for the White House that said we're not going to touch it. Now, Donald Trump, before he became a politician, he was quite outspoken about reforming Social Security. There were a number of times in which he said that we ought to index the normal retirement age, which has happened before. If you remember, it originally was 65, and then it was pushed up twice, and now the current normal retirement age is 67. All right, when this program began, if we go back to the 1940s, it was a different era. Life expectancy was vastly different. The work time frame of someone's life was vastly different. Now in 2024, with all the changes and the advancements to healthcare, the increase in life expectancy, we've only indexed from age 65 to 67. Donald Trump said a number of times that we ought to push the normal retirement age possibly out to age 70. Again, that was really before he got into the political realm. Now, maybe it's to appease older voters. He's saying he will not touch Social Security, will not touch Medicare, Medicaid from a standpoint of reducing benefits. That's something I wish both of them would address those realities. And I think if you give people enough time, if you give millennials and Gen Z 30 plus years to say, hey, it might be a little bit different, I think the economy and society could absorb those changes. And so I think it's something that we shouldn't shy away from. But right now, as we near the 11th hour in the campaigning season, they are certainly not going down that path. So that's one thing that I wish would be addressed a bit more. And our trade deficit, to China, that right now is at about $1.1 trillion. The U.S. trade deficit's about 1.1 trillion, 283 billion of that to China. So this is another thing, and this could be a whole nother episode in and of itself. But America and China are unquestionably the two superpowers of the world right now. China's economy has grown very quickly over the past 25 years to put them on quite a level playing field with the U.S. So these are two behemoths. One of the good things and the bad things, depending how you look at it, is our economies are so intertwined that the good part of that is we almost can't quite survive the way we do today if we were to decouple. So we, in a sense, we need each other. We're each other's biggest and best customers. All right. So when we start to have this quote unquote trade war, should Trump get back in and start to really, both from a PR standpoint, bump up that kind of aggressive talk, but then in reality, perhaps, kind of put more tariffs on China, that's something that they're not going to be able to just leave us. We will have to kind of acclimate to that new environment like we did in his first term in office. But that does give us the advantage of then resetting the playing field and having a new point of negotiation moving forward. as opposed to taking perhaps a more passive stance with China. So those are some thoughts there that need to be addressed. And that's another thing, like I mentioned, Jamie Dimon said the biggest threat right now to the economy is political unrest, speaking to Israel and the Middle East, Iran, and then Russia, Ukraine still going on. And of course, everybody's great fear, what if China ever went on the aggressive with Taiwan? That's something that has been on the back burner. And, you hear different rhetoric from both camps, but that's certainly something that we don't want to see happen. So those are some of my thoughts on the economic agendas for Kamala Harris and for Donald Trump. I know that was a bit of a wide-ranging monologue. I hope that gave you a firm idea of, if I cast my vote one way or the other, what might be the agendas. I think you can see clear. Kamala Harris, it's more about helping kind of bottom up, help the young professional, the young family, the first-time home buyer, and staying away a little bit from all of the aggressive talk abroad or with China. With Trump, his is a little more high level, obviously top down, make it easy for American business, lower taxes, lower regulation, unleash the American economy, if you will. And then on the offensive, go abroad and try and, get China to come to the table and play fair. And then also, get all these other countries that we work with to also rebalance that trade deficit via his tariffs, okay, which he thinks that's a great tool that his administration would be able to use. Another thing is, and I know I'm not digressing too much because it is relevant, but in respect to immigration and the border, obviously this is a huge political talking point that Trump wants to be tougher than any president ever, particularly on the southern border. And you had Kamala Harris, who should be well experienced there, was the border czar, I believe the title was, as vice president under President Biden. So now just recently, she has started to talk a tough game as well. And those are things that have a pro and a con. As you have this massive influx of immigrants on the southern border, there's a huge cost to that, to housing, to education, to healthcare, for all of them. Pros and cons. The pro side, of course, many of them are here working in our economy, perhaps doing jobs others don't want to do. That's the pro argument. Con argument, of course, is, who are these people? Are they good people? And that's a whole nother story too. But these are some of the things that are ancillary to economic agendas, but then have a direct economic impact. So again, that's another thing to take into consideration. But I think that's enough for one episode. I know I've been rambling for quite a bit here. If you have questions, if you have comments, wherever you're listening, whether it be the podcast on Spotify, on Apple, etc., leave some comments. If you want to watch this on YouTube, I know we have a lot of people just log on YouTube and just let it play in the background. I've heard this from listeners. Put some comments there. It's okay to have a little bit of a dialogue here. And the more educated we can all get, the better a voter we could be. And then we can demand more of our elected officials to do better for the American people. I'm Brian Kuderna. Thank you for tuning into this special election episode of the Kuderna podcast. And we will see you next time. And don't forget, please go out and vote. Take care.
This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Brian Kuderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Kuderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Brian Kuderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey, 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Kuderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.